Hi guys, welcome to today's trade of the day. And for today's trade of the day, I will be looking at the pound dollar. Now, why I chose the pound dollar specifically because there are quite a number of high impact news coming out later today, right? For the pound dollar. Okay, we have a composite PMI, right? That will be out later on in the afternoon, Singapore time. At the same time, later on tonight, we also have non-manufacturing PMI and crude oil inventories and non-farm employment change, which will be out for the USD. So with that, let's look at the pound dollar. Now, interestingly, the pound dollar made a strong push down and then it came back up, went sideways before pushing higher again, right? So if we want to take this whole movement, it's sort of a huge zigzag. So we want to see how far price can go up. Now, before that happens, initially when price came up here and came down, right, people thought that this was a double top pattern and the break of the neckline should see price going a lot lower. However, price seemingly reached here and reversed out of nowhere, right? It didn't fall in line with any Fibonacci retracement ratio. Okay, let me show you guys. Open up all Fibonacci ratios. Right, no Fibonacci ratio tapped this area here, right? It came close to a 50, but it didn't touch the 50 nicely. Even Fibonacci extensions, okay, you take this point to this point and back to the high again, and you open up all Fibonacci extensions. Okay, it did not even come close to any Fibonacci extensions at all, right? In fact, it closed below the 127.2, and then immediately the next candle it rejected above it again. Okay, so how are we to tell that why price actually reversed in this area? The answer lies in going down to the 4-hour chart. All right, but for the 4-hour chart, let's just go down to the 4-hour chart first. Okay, so if you look carefully at the 4-hour chart, all right, I just want to show this area. You look carefully at the 4-hour chart. Now, on the daily, this was a straight push down, right? However, on the 4-hour, you see a sort of a zigzag pattern. So let's use Fibonacci extension. 0.1, take the spike, 0.2 to 0.3. We see that price actually reacted right at 100%. Right? You see price came down, test the 100%, and then reversed. Okay, so this is one factor that caused the reversal, right? It was a key Fibonacci extension. Now, we look further back a bit in the past, we see a sort of this supply and demand area here, okay, in relation to price movement, right? You have very strong red candles, and then suddenly a small reversal of green candles, and then after that, very strong red candles again. Now, when we see such a movement, right, strong push down, and then a small pause, and then another strong push down. This pause here is when the traders in the markets actually think that price is currently at a fair value, right? And there's a lot of trading going on here, a lot of buying and a lot of selling to cause that pause instead of just a lot of selling. Okay, so to cause that pause, so there's a pause here, which means market supply equals to demand. So I call it the supply demand zone, right? So if I want to draw a box around the green candles, right? Let me just draw a box around the green candles. Okay, and then let me extend this level. All right, you see it's around the green candles. I'm just taking the body. When I extend it further, you see the price actually pushed into this area, right? Failed to break out of the supply demand area and immediately rejected and went higher. Okay, so for these two simple reasons, right, that is why we actually got this reversal here on the 4-hour. So now we're on the 4-hour. What can we expect price to do, right? What I expect price to do is there's this strong push up. Okay, there's this strong push up. We can take a retracement to do the last movement. Okay, and then we see that there's a 23.6 level here, which falls in line with the graphical overlap, so to say. Okay, and then of course there's a 61.8 which also falls nicely in the graphical. Okay, but I want to show you guys, before I look at the Fibonacci ratios, I want to show you guys one thing, right? If I were to draw a horizontal line across like that, okay, you would think that price is going to come to the, you think that price is going to come back up and then come back down. That could possibly happen. However, because of the sudden change in direction, coupled with something that I noticed in a line chart, when I switch to a line chart to ignore all the spikes, ignore all the noise, you see this is a very long spike. So it's a noise, okay, or you can say that prices were rejected very quickly from these areas. Okay, so if we were to change to line chart and use a line to connect all the highs, right? Something like that. Okay, and I change it back to candlestick. All right, so let me just do this nicely, okay? Try not to cut the candle bodies. Now, we see that actually price has already broken above this descending trend line and seems to be coming back to test it, right? So on the daily, if we go back to the daily now, right? Just now I said we will look at the 4 hour first. So now if we go back to a daily, right? Price has already made, okay, a reversal. So we expect price to actually break above this level and go higher, possibly to this last swing high, right? So on the daily, there's already a change in dynamics. Okay, on the daily, there's already a change in dynamics. So on the 4 hours, we should be careful of going against the bigger time frame. So what I want to do is I want to highlight the 23%. I want to highlight the 23%, the 61.8, and the negative 27.2. Okay, so these are the levels, right? We can ignore this 100% because I just wanted to show you guys the reversal. Okay, so what I'm thinking price could do now is actually make a pullback to the trend line, test the trend line, reject, and go up to this level here. Okay, I'll call this the 4-hour resistance, right? Or even if price were to surpass it, I'll call it the upside confirmation. This will mean that when price breaks above, okay, then the bullish case is significantly strengthened, right? Okay, so I'm just waiting for price to pull back down. So there are two ways of playing this. One is either you take a very risky trade and go short now to the 23.6%, right? Or you wait, be patient and wait for price to come back down to this level, to the 23.6%. Let me just put this one, I'll call it the buy entry, okay? At 23.6%, and then after that, just go long to the upside confirmation, okay? Now, this upside confirmation is the place where we can actually take partial profits, all right? And then we can let the remaining position go all the way to the negative 27.2. Okay, so I'll actually be patient and wait for my buy entry here, okay? And where will my stop loss be? I will actually put my stop loss at the 38, slightly below the 38.2. Okay, so this gives actually a nice risk reward. Okay, so somewhere over here, right? My stop loss will be here. Okay, so another reason why I'm waiting for price to come back down before going long is because if we were to look at technical indicators, right? We have moving average exponential. Okay, I like to look at the 21, okay, because price holds nicely when it's above the 21, right? You see price holding, testing the 21, but holding nicely. Even when price is below, you see it testing the 21 moving average. Okay, and why the number 21 is because it is based on a Fibonacci number. Okay, so should price actually break below this trend line again, close below, or even break below the stop loss, I would know that my bullish intraday bias is wrong, and I would actually be able to go short. Okay, maybe to the 61 or even lower, all the way back to the swing low. All right, but for now, this is how I'll look at it. Okay, I'm waiting for price to come back down. There's already a small rejection, so I'll just be patient and wait for price to come back down to the buy entry. Okay, so now it's a waiting game. All right, even if you were to go short now, there's no good risk reward because price is really in the middle of 4-hour resistance and upside confirmation. Okay, so this will be the partial take profit. All right, so this is how I would play it. Okay, so thanks everyone for tuning in to today's trade of the day, the pound dollar. Just remember, be patient. I'm waiting for price to come back to the buy entry. All right, if price doesn't come back to the buy entry and it tests the upside confirmation, if there's a break, okay, then it's still bullish. If price actually reacts off the upside confirmation, then I will actually go short. All right, so this is just something to take note. Okay, we have to be ready for all scenarios. All right, so thanks for tuning in. I'll catch you guys tomorrow. Take care.